Welcome back for another Fetch AI price prediction analysis video, and in this video I will be giving you areas that Fetch AI needs to continue holding above in the next coming hours, share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here, and also give you my pullback target areas. And at the time of this recording, Fetch AI is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. Fetch AI has also continued to obey the Elliot wave structures, where you can see that after getting our significant low on the 17th of August at around the $0.1639 mark, we started this movement to the upper side, completing the formation of this wave 1, giving us a high above the $0.27 mark. Then we saw a pullback in the formation of this wave 2 into the minimum target area for the second wave, highlighted on the charts using that blue target area. Then we saw another impulsive move in the formation of this wave 3, then a bit of a pullback in the formation of this wave 4, and finally we have seen the formation of this wave 5 to the upper side in a move that has now fully maximized minimum target areas for that wave 5, which can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3, where I first gave you the minimum target area at the fib level 0.618, and that is at around the $0.4604 mark, which is an area that we fully maximized. We continued to show that impulsive nature in the formation of that wave 5, and now we have managed to hit the fib level 1.618, and that is at around the $0.5686 mark. And there are now high chances that Fetch AI has now completed a 5-wave structure to the upper side, completing the formation of this Elliot wave counter 1 to the upper side. And there are chances that in the next coming hours we can expect a bit of a pullback in the formation of this wave 2. And the reason as to why I'm saying we can expect a bit of a pullback is because after seeing an impulsive move to the upside, we expect a bit of a corrective structure, which in our case should be the formation of this wave 2. And once you have a low in place for the second wave, we can expect another impulsive move in the formation of this wave 3. And the minimum target areas for the second wave can be given by connecting the Fibonacci's from the low of the first wave down there to the high of that wave 1. And the minimum target areas now lies between the fib level 0.382 and the fib level 0.618. And that is between the $0.4229 mark and the $0.3242 mark, which is the area that I have highlighted on the charts. And there are chances that in case in the next coming hours we see a bit of a weakness in the markets and maybe a continued pullback in the markets, there are chances that we are going to get back into this red target area over here. And it is within this area that we can expect to see a reaction and also a low in place for the second wave. And once that is in place, we can expect a reversal to the upper side, breaking above significant areas of resistances in a move that could now give us a high above the $0.6 mark in the formation of this wave 3 to the upper side. We also need to have in mind that maybe things might get more impulsive on the Fetch AI chart, and maybe at some point it won't give us a bit of a pullback in the formation of this wave 2, and maybe we might see a turnaround from the prices that we are trading within, continue gearing up, see a break above the significant high that we have made today at around the $0.58 mark, and continue gearing up and get above the $0.6 mark. We also need to have such a scenario in mind. And zooming out to now give you my long-term Elliot wave analysis, which I'm expecting to play out once the bull market is here. You can see that last year back in November, that is December, we saw our lows at around the $0.0525 mark before we saw this aggressive move to the upper side in a 5-wave structure, giving us a high above the $0.61 mark, completing the formation of this Elliot wave count 1. Then we started a corrective structure in the formation of this wave 2 into the minimum target area for the second wave, highlighted on the chart using this red target area. And there are high chances that we have now bottomed out in the formation of this wave 2, and Fetch AI is now starting an impulsive move to the upper side in the formation of this wave 3. Minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave above the $1 mark, and that is at the fib level 1.618, which is the minimum that we can expect that wave 3 to the upper side to do. So that is what I'm keeping my eyes on the short term here on the Fetch AI chart. And I hope that video was of much help to you, and I hope to catch you in the next one.